Welcome to Talk Tickers, where we break down the latest earnings calls for you. Today, we're diving into NRG Energy's third quarter 2025 results. And this one is a really fascinating case. You've got a company that reports stellar numbers, just fantastic, only to see its stock fall. So let's dig in.
So, what is going on here? On one hand, NRG just delivered an incredibly powerful quarter. They beat expectations on literally every key metric. And on the other hand, the stock drops on the news. So let's spend the next few minutes trying to unpack this disconnect.
Okay, first, let's get grounded in the numbers. And believe me, they paint a very clear picture of just how strong this quarter really was for NRG.
Let's start with adjusted earnings per share. This is, a key measure of profitability. It came in at $2.78. That's a huge 32% jump from last year, and it absolutely crushed what analysts were expecting by more than 50 cents a share, a massive beat.
And it wasn't just on the bottom line either. Revenue also surprised everybody, coming in at a whopping $7.64 billion. That's nearly 7% higher than Wall Street had penciled in. And then you have adjusted EBITDA. Just think of it as a good stand-in for a company's cash flow. Well, that grew a really robust 14% to a record $1.2 billion for the quarter. We're talking the highest in the company's entire history.
So when you look at all the numbers together like this, you can see it's just a clean sweep. NRG beat on revenue, they beat on earnings, and they showed some serious growth in free cash flow. From a purely operational standpoint, wow, it is really hard to find a single flaw in this quarter.
So with numbers this strong, you'd pretty much expect management to be feeling confident, right? And they were. Their story on the earnings call really boiled down to two powerful themes.
They highlighted two core pillars. First, this accelerating momentum they have in powering the whole AI-driven data center boom. They even signed new deals for another 150 megawatts of load. And second, a really disciplined commitment to returning capital directly to shareholders.
And look, this wasn't just talk. They're putting their money where their mouth is. The board backed it all up with a brand new $3 billion share buyback program and an 8% dividend increase. These are real, tangible signs of confidence in the future.
And the CEO's closing statement on the call, it really just summed up the whole mood inside the company. This kind of public confidence is a really strong signal to investors that management truly believes the best is still yet to come.
And yet, the market seemed to completely ignore all of this optimism, which of course brings us right back to our central question. With such incredible news, why on earth did the stock fall?
As you can see, the stock closed down almost 2% on the day of the announcement. And get this, it did so on unusually high trading volume. So this wasn't just a quiet drift lower. This was a clear, active rejection of what seemed to be absolutely stellar news.
So what our analysis suggests is that this probably wasn't about NRG's fundamentals at all. The stock just got caught in a wider market downdraft. On that particular day, some new inflation data came out that spooked investors, and that caused a big sell-off across the board. Even great news couldn't save NRG from getting pulled down with the tide.
Okay, so how should an investor make sense of all this? Let's put it all together and issue our forward-looking rating on the stock. First, let's just be super clear on our terms. When we assign an outperform rating, it simply means we expect the stock to do better than the overall market. Think the S&P 500 over the next year. And given the absolute strength of this quarter and what we really see as a mistaken market reaction, we are officially assigning NRG an outperform rating.
So here's the bottom line. We believe the market has created a buying opportunity here. It seems to have mispriced the stock based on short-term noise, while the company's fundamental story, which is driven by great execution, AI data center demand, and strong capital returns, is not only intact, but it's actually accelerating.
All right, now for investors with a little bit higher risk tolerance, this kind of setup, a strong fundamental story, clashing with a negative market reaction, it just screams opportunity. So let's look at one way you could potentially trade it.
The key event on the horizon, the one we're all watching, is the closing of the major LS Power acquisition. That's expected to happen in the first quarter of next year. That's the next big catalyst.
The thesis here is pretty simple. Once that LS Power deal closes, we fully expect management to issue very strong guidance for the newly combined company, and that could force Wall Street to completely reevaluate the stock, potentially sending it a lot higher. A more speculative way to play this is with call options, specifically out-of-the-money calls. These are essentially low-cost bets that the stock will rise significantly, and you'd want them to expire after the deal is expected to close.
So, to wrap this all up, NRG's quarter was fundamentally excellent.
We believe the market just got this one wrong, creating what could be a really compelling opportunity for investors who can look past the short-term noise. But, as always, please do your own research. This is not financial advice.